bound is negative to standard deviation, and we use this chart to indicate whether the index level is overvalued or undervalued. Yeah, that's my updates with you.
It's a good indicator. It's pretty stable, actually. Well, of course, we've only got 2 years of data in a low interest rate environment, so but not pretty stable, really, right? 17 to 20, 21, 22.
Yes.
Yeah.
In the majority of the historic time, the index level is fairly valued.
And this is cap weighted, right? So you're factoring in the big Comcast.
Yeah, market cap weighted, and this chart shows the different methodology. The blue line is the market cap weighted P ratio, and the yellow line is the simple P ratio. That means the total market divided by the total earnings. And this line's trend is same as the index level trend. So we use the market cap weighted P ratio. That does make sense.
It'd be interesting just to rerun that, excluding not as a chart to publish or anything, but excluding Comcast, since Comcast is such a big weight, to see what that looks like without Comcast. Because Comcast is what percentage of the index? I forget. It's pretty big, right? I mean, I know.
Yeah. So you mean that we should exclude Comcast and recalculate the market cap weighted P ratio?
No, just as an analysis, when you're looking at something like this, where you have one company that's so dominant, it may be driving these results. So
okay,
the suggestion, it's not, again, none of these are absolute rules, but when I look at something like this, knowing that Comcast is such a big weight, I would say take a look at what it looks like without Comcast, and might give you the same story, might give you a different story. But it's just Comcast dominates the index, and so it's always going to be, when you look at things, I'd always tend to look at things with and without Comcast. Just because
I got it.
Is built in real life. What you would do is, if you actually had an index like this, you'd probably put a cap on Comcast at, some percentage. Usually, it's where you probably want it more than 10%. And I don't know if it's even 10% of the index. I forget. Do you remember what the weighting is of Comcast?
17%, around 17%. Yeah,
that's high. Yeah, that's high. So normally there's techniques where you can cap an index weight. Again, we didn't build that into our methodology, and maybe that's something to consider, right? Where no one stock could be more than 10% weight. That's still a lot, but it'll kind of balance out the other factors about the other companies in the index, because 17% it's gonna drive a lot of the analytics, just because it's such a big part of the whether it's the performance, whether it's the PE ratio, whether it's the factor analysis, everything is going to be dominated. And so maybe something to think about for the future is imposing a cap on Comcast. 10% is reasonable. You could, I think 10% would probably be right. You can go lower, but even in the S&P 500, you've got stocks that start to climb to 5, 6, 7%. So, but 15% is a lot. And then you just cap the weight, right? And then adjust everything accordingly, reinvest it and everything else. So, but that's something to think about for going forward.
Yep, I got it. Thank you.
But that's interesting. Yeah, that's good analysis. Take a look. Wait to see when you take out Comcast. See what it looks like then, right? Because it's Comcast. I don't know. I mean, again, I don't know enough about. You can take a look at Comcast, see how what its PE is and what its valuation looks like. But at 17%, it's going to drive a lot of the index. Think about it. And all those small companies, you don't get any credit and any value in terms of it. So
I got it.
Interesting.
Yeah. Hi, Tulip, do you have some updates?
Yes, I do have some updates. So it's regarding like you advised at the last meeting that we should start thinking of new ways to create an index. So I just want to ask, because I'm still thinking about doing the crypto thing with equities, but I'll just like to ask, because I think it's one of the questions that came up, that what aspect of cryptos should we really look at? Are we looking at like the centralized or the decentralized parts of it? And then is it for cryptos that are trading in the US or cryptos that are trading out of US? Like some questions just came around it, like I can't just speak from any universe.
Yeah, good question, right? So um, what's going to probably drive your decision is, I think, where you have access to data, number one, right? Because there's not a lot of, the problem with something like crypto is that there's multiple trading platforms. And as much as there should be an arbitrage that links them together, and I think generally it does, it's not perfect because it's not really fungible. It's actually not as fungible as some people realize on a platform, right? Because if it's in a wallet on one platform, you gotta pull it out of that platform to deliver it. So it's not like it goes through a clearinghouse that'll help keep it all together. So I think number one is see what data sources you have access to, right? That's a practical consideration. I don't think the price, if you're looking at the price of crypto, right? Again, and whether it's Bitcoin or Bitcoin and Ether, um, you know, there's anybody's, guess if you want to create a basket of it. So what's the idea? If you're going to create just a crypto index, really what you're doing is you're creating an index of prices, right? In some sort of weighting scheme that doesn't tie back to the equities, although you can combine the two. These equities probably are not going to be correlated with crypto. And so, there are the other way that people have looked at doing crypto are like, companies involved in the crypto industry. What does that mean? Companies that are involved in, say, data centers, or chip manufacturers that are making stuff that goes into mining of crypto, things like that. That's kind of like the other approach. Again, it's hard because we don't have access to all the data that you would need to know, right? I mean, data centers. Well, data centers are used for a lot of different reasons. It's not like a data center is just specific to crypto mining, but there probably would be, and you look at data centers. Is it Amazon? Is it, Google, right? I mean, they all have data centers, but it's a part of the bigger business. So it's not an easy way to look at it other than as a price index. Now, price indices you could do. You can take 4 or 5 different coins, come up with a market cap like weighting scheme. If you go to CoinDesk indices does provide them. So you can see how they built them, right? And I think, most of them will be weighted heavily to Bitcoin because it's probably the biggest in terms of kind of market. Think of it as a market capitalization. It's, I don't know how accurate the numbers in what they publish, but that's kind of how people have built them. Like where there's call it, 4 or 5 coins, Bitcoin, Ether, I don't know what are the next 2 or 3 ones after that. And then you have to come up with some sort of weighting scheme. Question is, do you have access to that data? I don't know. But that's what CoinDesk has done. For products, it's more complicated because, again, now you have to pull prices from multiple trading platforms, and there are people that aggregate it. But it's much more complex because they're not regulated, and so you don't know if those prices are good prices or not. Check Bloomberg, see what you have on Bloomberg, right? That may be a source. Or as a way of getting something. But yeah, that's the problem with crypto. It's the data.
Yeah, because I saw one that Fidelity has, but I think it's for Ethereum coins only. So they have like an index for Ethereum coins. So I was wondering if it's okay to use that, because I also saw the one for futures on CME.
Yes. So what the futures products did was CME gets prices. It's a bit. They have both Bitcoin and I think now they have launched Ether also. I know for the Bitcoin they pull prices. They work with somebody that pulls prices from 5 different exchanges, but they have to do that intraday. So because that's a real-time index for futures, you have to, and it's more complicated from a regulatory standpoint. So the settlement value and the underlying index price, they work with somebody that publishes that for them. And it's a combination of 5 different sources for Bitcoin trading. And they average it together. I think, you can check their methodology, whether it's I imagine it's a simple average, but it could be, it might not be. But so that's a price index, right? And then from that, they develop futures. And then futures were originally the first products were ETFs are based on futures before they created ones that were based on the spot market. So that's just another way of building price indices. You see the same thing in commodities. Commodity indices typically are based on the futures prices of commodities. So because you can't, how do you figure out what oil, right? What grade of oil, and how do you put oil into a product? So they usually build them on, the oil futures contracts, or natural gas futures contracts, or wheat futures contracts. And then they come up with a weighting scheme. That's it, built indices.
Okay, so because I want to ask, because for the futures, I noticed that they had like contracts. So like if you want to take a contract now, it'll be maybe from now to December. So are you saying when we get to December, we have to roll over?
To roll it over, yes. And there's actually how you roll it over, when you roll it over, that becomes part of the methodology.
Okay.
Yeah,
Okay.
so that's where it gets a little more complicated for the sort of problem, because you can't wait till the end.
Yes.
Right. And so usually there'll be some rule as to when they roll over.
Okay.
And the other problem with futures-based contracts is, you know what contango is? That's kind
Yeah.
of the curve, right?
I just know, yeah.
That impacts futures indices quite a bit. And so you have to kind of factor that in when you roll it, right? And so some of them may be 75% of the index is in the current month, and 25% is in the next month, to kind of minimize some of that contango risk. So if you want, take a look at the methodology for either we have access to Bloomberg has a commodity index, BCOM it's called, Bloomberg Commodity Index, or the S&P GSCI, and you can see how they build commodity indices. And you can see they're typically production weighted. That's the common approach for commodity products. So the weighting, again, everything needs a weighting scheme. So they tend to be more dominated by oil, because oil is the most produced commodity in the world. And so things like GSCI have a big oil weighting. I forget what the percentage is, but I think it's 40 or 50% of it is oil. So you can just see how they've constructed it when you're getting into commodities, but they're all based on futures prices. And you can see what the rules are. When do they roll those over? You can't hold them right till expiration, and you build that into your methodology. So it is they are a little bit more complicated.
Okay. Okay. Thank you. Thank you.
But it's a good learning. It's a good learning to understand it.
Yeah.
Okay.
Okay, thanks. Hey, Michael.
Moving those changes to dev first, and see, because like the demonstration that we showed was on Streamlit, which was a Python powered server, but now we'll be coding it in HTML and see everything if it transfers well. And if everything goes right, we'll then push to master, and it will be available to see live.
I tell you, he was very impressed with what you guys built. He told me afterwards, and you could see the reaction when he said, "This is doing this live." So you guys did a very nice job. Very impressive.
Alex, Yanguan and Tululupe are graduating in May. And what I've told them is that, and students, and you're right, you brought this up in the past, but students really don't pay too much attention to the index because they're not being taught the index, right? They're being taught stocks, they're being taught bonds and portfolios management. And yet, I mean, especially what's happening in the market today, it's all indices.
Yep. Yeah, it is.
It's all indices. So I want to encourage them to, whenever they're looking for jobs, because they have something to say here, really important is to
Yep.
look for those jobs in those areas, having to do with,
Yep.
indices.
And I think Chris highlighted that too, right? It talk about there's so many there's so many uses of the knowledge that you gain about indices, whether it's in trading, whether it's in product building, whether it's in analytics, building systems. So it's not just building the indices, but understanding how indices are built leads you down to a lot of paths.
Yeah.
You know,
it's-
and so again, and you want to translate that into your job search and into your interviews, because you'll have an advantage over somebody that all they know is, and there's a perfect example. There was an interview done when we first set up the S&P joint venture. I did an interview on TV, and they had the reporter asked about the Dow Jones Industrial Average. Everybody understands the Dow, but didn't realize that, they said, well, why do we talk about the Dow Industrial Average? And it's a bad index. It's a bad index because it's price weighted. It's not reflective of the U.S. market. And this reporter had this aha moment of like, wow, these things are all very, very different. And they didn't understand the business behind it. And, it's something that they've been using and talking about for years, but they never really understood it. And I think that's something that you guys are learning, the mechanics behind it, that you could then use in your job search. Whether it's companies that are building analytics, as I said, if you look around in the ETF world, in the index management world, there's a lot of companies that their businesses are based off of indices. And it's not just equities. It's fixed income, it's rates, it's going to be private markets someday, right? It's commodities, it's all over the place. The basics are the same, but the nuances are very, very different. How you build, like we were talking about, building indices for commodities. Every bank has a commodity trading desk, and all of them issue products based on commodity indices, not just pure commodities themselves, but in baskets of commodities. Sometimes they build it themselves, sometimes they license it from other people, but the traders need to understand it. They need to know the weights, they need to know what's driving the index performance. They need to know how they're going to hedge it. So you have to know the rules. It's a lot. There's a lot of opportunities out there. And you guys have an edge, I think.
Yes, especially now because, and I'm encouraging the students and for the future students as well, to really look for not looking for the openings, but developing their network, especially with smaller firms, because everybody wants to work for Goldman and S&P and, but unfortunately there's a lot more jobs in a smaller firm. Look at Volos Software, for example, right?
Yeah.
And it's especially important now. I don't know if you know the news, but today unemployment came out and it's higher, right? It's at 4.3% versus 3.5 from last year. So unfortunately, my concern is that you're going to be looking for a job in a rising unemployment, and especially for Ningguan and Tolupe. So be very aware that jobs are, we're getting hit here. We're getting hit. So you really want to go out for the small firms, find out firm, maybe Alex could help you, but which firms out there, like Volos, makes use of indices?
There's a lot.
I'm going to go after these people.
And it's not just in the US, it's global. And the other thing is if you're, whether it's in London, whether it's Hong Kong, whether, all over the world, indices are used. And in a lot of markets, they're not as sophisticated. So going in with knowledge is much easier. It becomes almost easier. But every market has indices. Every exchange uses them. Every bank in every country uses them. New markets that are building them, in the Middle East, in Latin America,
Yeah.
all over the place. And so, they're not all building the S&P 500. They're building different types of, somebody I could tell you, I'm working on a project now where somebody is building a credit spread index to be used with risk-free rates, right? But it's an index. At the end of the day, it's a different type of index, but you know, how they commercialize it, who they commercialize it to, how it's used. I mean, there's lots of opportunity in the broader industry.
Because most traders, I don't know if you know, but 30% of the market, 30% of traders beat the index.
Yeah,
Most of the
equities-
ones,
the equities,
equity,
it's a lot higher than that, actually.
it is higher. I mean, I saw an article from
On
the
my
Wall
post on
Street Journal.
LinkedIn, you'll see I published the data there.
Really? Okay.
But again, don't think of it as just equities, right? Every asset class, right? If you look, BlackRock just bought a company that produces private market data. And one of their goals long-term, it's a lot more pretty complex, but is to create investable products using indices of private markets, right? Hedge funds, real estate, private companies. They'll be building indices of those versus the performance for benchmarks. The complexity they'll have is they're not going to easily be investable, but they'll be building indices for performance measurement, for analytics purposes. This company Preqin, they spent $3.5 billion for this. The company makes a couple $100 million of revenue, huge price, because they need to bring transparency to markets that historically have not been very transparent. The indices allow that, and then will come the products, and then will come, you know, so the opportunities are there. You just have to kind of understand, take a big picture. But check the internet, you know, ETFs are easy because there's a lot of public information about ETFs. You can find out the firms that are issuing ETFs. There are a lot of like ETF.com is one site. I mean, there's a lot of news services that'll give you the names you can see the names of the companies that are involved in the industry. That's just the tip of the iceberg. That's just one part of it.
I would like to ask, like, how do we really get to make products out of indices?
How do you? That's the game. You know, so you know, again, once you build the index, the next step is what companies like what Chris Bialka, what his team does is they get product issuers to license their use. And the two broad use cases are either as an investable product or to measure performance. Those are the two broadest cases. Investable products are where the money's at, because as those products